Hello everyone, I'm Timothy Jagger.
And I'm Anthony Molinaro, and here's your property market wrap for 2025, plus your monthly digest of December's results. We'll cover home prices, rents, and what external factors could mean for the market for this year in 2026 and beyond.
Now, Australia's housing market performance in 2025 was varied. We saw standout performances for Perth, Brisbane and Darwin, each notching amazing results in growth for the calendar year of 15.9%, 14.5% and 18.9% respectively. Melbourne, as you can see in the graph, was again the worst performing capital city with growth of 4.8%, which overall is solid considering over the course of 2020 and 2024, when we saw a negative return with home prices decreasing by 1.8%. Cotality's Home Value Index records Melbourne's median home prices of $827,117 for units and houses combined, the lowest median of all major capital cities.
Now, for the month of December, we saw home prices in metropolitan Melbourne retract by 0.1%, ending the cycle of 3 consecutive monthly increases. Detached houses in Melbourne outperformed units over the year. House values rose a staggering 5.8% over the 12 months, with the median house price now just under the $1 million mark at $981,165. Units recorded a gentler 2.5% annual rise.
For regional Victoria, we saw the month of December record growth of 0.8% for houses and units combined, finishing a full year with 6.0% increases in prices. Although in a similar performance, you can see in the graph here, to Metro Melbourne in terms of growth when measuring against other major states. Regional growth, where Western Australia topped the charts with 16.1% growth, followed by Queensland with 12.6% growth. New South Wales continues to hold the highest median at $813,000, but Queensland is close behind.
Now, across Australia, rents rose 5.2% in 2025 for houses and units combined, up slightly from 4.8% in 2024, but well below the near 10% jumps between 2021 and 2023, which were mainly driven by smaller households and a rebound in overseas migration. Now, in the 5 years to 2020, rents grew just 1.2% per annum. However, over the past 5 years, growth has averaged at 7.4% per annum.
Rents rose across all major regions. In 2025, which you can see here in the graph, while rents rose, home values have been rising faster, which is putting downward pressure on gross rental yields. Nationally, the gross yield slipped 11 basis points over 2025 to 3.56%, which is the lowest since September in 2022. Yields in Sydney remain the lowest at around 3%, while Darwin is highest at 6.2%, despite a 61 BPS fall over the year. Melbourne remains an affordable capital city to rent, but when compared to Perth, Brisbane and Sydney.
Now, the external forces shaping the Victorian market and Melbourne market in 2026 are follows. 1. The United States reduced interest rates on the 10th of December when the Federal Reserve cut by 0.25%. This marked the third cut rate in 2025. Now, this will generally have a positive effect on the Australian real estate market, with wholesale funding typically dropping also. Now, number 2, that will be from February the 1st in 2026, APRA announced a new cap on high debt to income lending. Now, the move is a preemptive move to curb the risk in regards to the amount that you can borrow.
Now, number 3, from July 1st, all Australian taxpayers will receive a tax cut when the tax rate applicable to the 18,200 to 45,000, so the second income tax bracket, changes from 16% to 15%. In July 2027, the rate will be then again dropped from 15% to 14%. And number 4, on the super front, earnings on larger super balances are set to be taxed at a higher rate from July 1st. The changes still need to be legislated, but assuming they are, earnings on balances over $3 million will be taxed at 30%, up from 15%, quite a significant increase, while earnings on balances over $10.
Now, remember, the information provided is of a general nature. Always seek independent legal, financial, taxation or other advice in relation to your unique circumstances. Thank you again for taking the time to watch this month's market wrap. And until next month, it's bye for now.